Hey everyone, Doug Smaldino. Happy Wednesday. It is July 27th, and as y'all probably have heard, the Federal Reserve has released their interest rate hike for this month's meeting. And as you can see on my screen, they increased the rate by 3/4 of a point. So this was already, basically predicted. This was baked in. Everyone knew what it was. They kind of had to do it. They didn't need to do it, in my opinion, but they did do it. Markets reacted tremendously well to this. Look, if you guys haven't, you got to subscribe to this channel if you haven't already. Basically, I did look. This is a video from last week. I'll just play a little snippet here so you can hear.
It's all energy, but no one wants to listen to me. But it's all energy. The CPI in July wasn't the greatest either. Well, how could market share create in July? It didn't. It was all overblown BS. Federal Reserve's going to meet on Tuesday and Wednesday. They're going to grab each other's ass, and they're going to decide to go with about a 75 basis point increase, okay?
The kid nailed it or what?
Big deal.
But it meant nothing.
The market's already priced. That's already been priced in. Think the stock market cares?
Baked in.
The stock market doesn't already know that? It's already priced in there. This is looking down.
This guy knows what he's talking about, okay? This guy right here. All right, now look, so what did the market do? Let's take a look real quick. Freaking stock market, number one, raged. Dow up 434 points. NASDAQ up 469 points. Let's look at the larger chart here. There's your Dow Jones over here up 434 points. Didn't close at the high of the day. Volume was a little bit light, but it was actually very light, but it is what it is. Still probably waiting to see what the Fed was going to do. Okay, great news. Now we're significantly above that 50-day average that we've been talking about. So this is all positive, very positive for real estate and home buying and prices. So I don't know. Let's see what that doom and gloomer guys are saying over here. Market recession, 50% off, the end, it's over, so on and so forth. You know how I feel about these guys. They're entertainment value pretty much. See, I have my entertainment value too, but at least I know what I'm talking about. All right? Now, better news. Check this out. Bond market. Guys, mortgage rates have been slowly creeping down, okay? We got things are looking up. What's happening? The markets are stabilizing. The stock market is getting back to what it's getting back to what it was. You can see it's trying to this little uptrend we're in right here. You see that? We're trying to get back up, level off, and see what happens from there. I think we're going to be going higher. It needs time, but bottom line is, in the meantime, mortgage rates have dropped. When the mortgage-backed security price goes up, like it did say, that's a substantial increase. Mortgage rates go down. Now, how can that happen? How does the Federal Reserve raise rates, okay, and then mortgage rates go down? What? No. But here's the thing. When the Federal Reserve, like I've said this before, but when the Federal Reserve raises rates, they're raising the rates at which the Federal Reserve lends to member banks. What does the Federal Reserve lend to? The Chases, the Wells Fargos, the Bank of Americas of the world, okay? If it gets increased, then Chase, Wells Fargo, B of A increase the rates to consumers, but they don't really affect mortgages. They affect student loans, consumer things like credit cards, car payments, and a basket of other things, but does not really affect mortgage prices. The only thing that affects a mortgage rate, write this down, all right? Mortgage rates are only affected by one thing, and that's the price of the mortgage-backed security. So here, we watch this is the one security right here. This is the 30-year fixed rate 5% coupon. It's up. Now, when the security goes up, mortgage rates go down. So look, you can see this is really interesting stuff because you can see that we've been fighting off our back for a while, okay? But you can see that we've stabilized. We're trying to make an uptrend now. Now look, we were back here, like you said, at the beginning of the year, we were, much lower. The security price was much higher, rates were much lower, but we're working our way back. We're getting away from the volatility, at least the downside volatility. I think we go with lower rates from here. Okay, but that's the bottom line. Things are looking good. Today was a really good day. Totally predicted. The Federal Reserve even said that, hey, going forward, we may not have to be as aggressive. But it's all energy. It's energy and food. You look at the core CPI, it's not that high. which the core CPI, by the way, excludes energy and food. However, keep in mind that all the other components of the CPI, everything's got energy baked into it. If you're a real estate agent, do you have real energy baked into your P&L? Of course you do, because you got to take an expense deduction from your driving from here to the open house to the showing the client to this to that to the Tom Ferry convention, blah blah blah. Right? It's all in there. So it takes it out. The core CPI extracts the raw cost of food and energy, but not everything. There's still some baked in there. So anyway, guys, just wanted to give you a quick update. Things were great today. Reach out if you have any questions. This is looking very positive for the real estate market for the rest of the year and for next year. Okay, we'll get back to you later in the week or next week with more. Have a great day, everybody. Cheers.